Good morning, welcome to today's morning outlook. This is Kim speaking on Thursday the 30th of May. So as we get towards the end of the month, we could see some balancing going on towards the end of the month. We occasionally do, but what we've certainly got in these markets at the moment is a bit of risk off. Traders are moving away from risk. They're not liking the fact that the US bond yields are being pushed higher on the lack of interest, a very little demand, which in turn is not good news for equities. Seeing equities pushed on that basis, and it is good news for the US dollar. So we're seeing the dollar bought. But as this all happens, risk comes off. People take the risk off the table. They're not looking for the riskier assets. They're going for safety, which in turn, there's things like the dollar yen, which has been pushing it back up to 158 sort of area. These prior highs is around this area here, and we're seeing the risk, or the risk of that coming off effectively. In this case, the dollar is actually sold here. There's the yen benefits, but if you look at the yen against many of the other majors, particularly the Aussie, etc., you'll see it's extremely strong this morning relatively. But so as a technical level, it's sort of reached where there's risk of intervention. So that's been reached. Also, there's of course the situation with the yields. So all in all, it's one of those perfect little storms. It's pushed everything down this morning. In terms of the news out today, I should bring that up first. There's not a great deal here. There is the Swiss GDP data out at 8 o'clock. It's not really going to move the markets too much. Famous last words. Bit of Spanish flash inflation. Anything that's moving away might have a little ping on the euro, but it's a lesser weighting. But then this afternoon we've got US GDP, but this is the prelim, so it's the second reading. The flash is much more powerful. So this one has less impact generally because there's a reading out there already. But anything negative on that might, instead of weakening the dollar, you'd expect it to weaken the dollar. It might just take the risk off the table even further. So be wary. What might happen here? Pending home sales, etc., and really not. The price index might kick things. They're part of the GDP data, so there's numbers in there which could create some volatility, so do watch out for that. So anyway, let's look at the technicals and what's happening here. Well, the euro's got into a sort of a perfect storm as it looks. It didn't quite break into a new high recently, and all of a sudden yesterday we saw it coming off, and it's taken the lows out between the two highs, so it's confirmed a lower high, and it is looking soft. Question is, how do you get into it? Well, it's a difficult one because people will just jump aboard, but there is risk. There's a daily pivot which sits above there. Now it might just be too far away from it to actually get there, but we'll wait and see. Personally, I just don't like risking just jumping aboard something like this. It needs a retrace. I mean, there was a retrace yesterday afternoon, I guess, and again it took off, and it might have given a better opportunity back here if you were really looking to get short on this euro dollar. Now we do have the ECB meeting next Thursday. We've got non-farms on Friday. We've got the Bank of Canada on Wednesday, along with the ADPs, of course, on Wednesday. So there's a lot of action next week, which, as we're coming into a sort of an end of a quiet week, we might not see a great deal happening. But anyway, personally, I'd wait for the retracements here. The pound Now, as the volatility starts building on all of these, of course, the reaction could be quicker and stronger. Any counter reaction. The pound, it was holding up pretty decently yesterday, but eventually rolled over like the others. It's put this pivot swing in, and we've seen the trigger of that, and it would suggest we see further downside here as well, isn't it? It's not going to be away from things. It does have an element of support below us into its quarterly pivot, which is held previously. It's held a couple of times previously, but we'll see if that holds it. That also comes with a daily S1. It's not that far away from it. We'll see what happens at that stage, but that might, if you're looking for the short side of one of these markets, it might give the opportunity. The pound might not be the play though for the short side. The euro might be better. US dollar yen, well, as I mentioned, the 158 area, etc. This is you've got potential further downside here. So it's just looking, but it's just like you're selling into a bottom here. It's not far away from these previous lows. You might the momentum might be slowing up here, and it's just a case of waiting for potential consolidation. We go back and we look at these markets, and it happens so often is you feel like you've missed something where you have, and you can't be trading. Well, you could be trading 24 hours a day on some of these markets, but you'll probably be sitting there for 23 of the hours and nothing happens, and the hour you take a break, it'll happen. That's almost sod's law. But anyway, yeah, you're going to miss things like this at times. It's a case of looking back at the bigger picture and think, well, hang on a minute, this is barely moving in the bigger scheme of things. And if the yen is going to roll over, for example, there'll be other opportunities, and maybe for longer periods. Anyway, Aussie dollar. So we've seen this coming off. Now this has been coming off anyway. It'd been edging down. It got its little rally in into Monday. Well, when we were away having a bank holiday, they took advantage. Coming into Tuesday, then it popped up a little bit further and rolled, gave us a shooting star, doji, and then we've seen the again pivot swing coming in here. Hasn't quite taken out the lows here just to confirm the lower high, but on the bigger scheme of things, it does look a bit soft until you come down, and you've got to be careful here because we're sitting right into this quarterly pivot. You can see how many times it's held it previously. Maybe it will fail at this stage. It's a big enough action. As I say, the risk is coming off. Traders are looking for the safety areas. It's already hit the daily S1. Now this is maybe a case of where it breaks the S1. There's the potential running down to the S2. As I said, though, the momentum of this whole move here might be coming towards an end, but I'd rather see some sort of consolidation and then a run. US dollar CAD, again, pivot swing, yeah, all the factors I would expect of something where we'll see a bit of a continuation. If you were purely trading on this time frame, you probably missed the initial entry, and there might be other opportunities to come in here, and it's just a bit of a waiting game. So I'll just bring this back here. You're not that far away from these prior highs over here. You sort of go buying into it, bang now, and you get the sellers coming in that will be looking at selling into the double top. So you've got to tread carefully when you go chasing for these things. So it's a patience game, waiting for retracements or consolidation around the highs in that case, or on the markets pushing down around the lows will be good. New Zealand dollar, it's been doing pretty well recently, but breaking over here and looking pretty soft. And again though, be careful, it's right onto its quarterly pivot. We could see one of the big a really decent turnaround this morning So you've got to be a bit careful. We look at it, we look at the direction of everything. It's all looking soft, and we could. I'm not suggesting it's going to go flying up or whatever else, but we could, as the morning progresses a little bit, you just sort of see it sort of bottom out a little bit, and then suddenly on these markets they start moving the other way, and before you know where it is, they're back into their pivots. I mean, this is run through its S1, S2, this New Zealand dollar, looking particularly soft down there. It's quite unlikely it will come back to its daily pivot, but yeah, it's one of those 20% type days where it could. Or it could be one of those 20% days. I'm not saying it will be. Swissy doing okay this morning. It's not really flying. There's more going towards the yen with the potential or expected intervention, maybe profit taking on some of the carry trades, and that will start. If that starts rolling through, that becomes on the carry trade, it becomes a bit more of something, and it pushes more momentum into it. But here, well, lower highs come through. It's definitely given us the lower highs and broken, and at the moment it's looking like it's in a bit of free fall. But yeah, looking quite soft. As I said, coming to 8 o'clock, things could start changing, slowing down, maybe just rolling on a little bit longer and then switching. But I'm just trying to keep some sort of open mind. And there's the euro yen again. This is where some of the advantages that it's right through its S3. It's almost into its S4 down here. It's really moved. So we're getting a bit of a react counter at the moment as we just move into 8 o'clock. But we'll see. Traders might just panic and carry on pushing through. My preference, as I said, is from some consolidation or a retrace, and then look and see if we can get something in direction in these new moves. But things can change quite quickly, so be careful. Now the pound yesterday, it broke through the key levels here, but only, I say broke through, the euro fell I should say, and the pound strengthened, but it was relatively short-lived. The German inflation data quite lame on a month-on-month basis, and it's a pig's ear there. It did completely recover at one stage, but well, we'll see. It may have further downside, but it really is a bit of a mess. Okay, I'm going to look at the rest of those in the room in a short while. Let's just move on and look at gold, oil, and a few of the indices here. So gold coming off, it's not protected away from risk off. Broke through yesterday. I put my little flag on there. The flag still sits there. Yep, we're catching a bit of a bid at the moment, but we'll see what happens here. It's already through its S1. It's less chance of coming back, but it has double bottomed. We have got the double bottom, and there'll be divergence across this, so we'll get the divergence traders coming in for this. I'm saying there's divergence, let's have a look in short. Yeah, there is clear divergence there. So they'll be coming in. So no real trade there. Oil, just when it looked like it was going to get a bit of momentum in a different direction, it runs into resistance. Actually broke through all the 500 etc, ran into its 4-hourly 200 by looks of things, and turned round. You've guessed it. It's 11 o'clock yesterday it came off. It's looking a bit on the softer side. Did make a new high there, but looking a little bit soft with the risk off at the moment. It's not necessarily where traders are going to be going. S&Ps again. So we've seen a pivot swing finished off yesterday, and it's just coming off a little bit now. So I can imagine some intraday traders will be quite interested in trying to do something here. But looking yesterday, it did come off in the morning and then just consolidated. And this is a sort of pattern some sort of consolidation that we need to see, and maybe if we want to see a continuation today, and then on some of the Forex markets. But this is just currently looking like it wants to bounce off its S1 there. Untouched daily pivot still. So markets were to get a bit of a kicker. Watch out, and that might be a point of sell. Nasdaq also. I mean, as I said, with all these markets, I believe there's an element of weakness in terms of what's happened, in terms of expectation and everything else with interest rate cuts, in terms of they're less likely to happen, etc. And this is pushed up stronger than when they was expecting it to come off 0.75% in the year. So it does seem weak, but all the same, these equity markets can really spin round and catch you out when they're in this sort of bullish sort of picture. The institutional money still looks bullish as well, so tread carefully. The intraday trades may be. They might catch a lucky swing, or a good swing, but I mean, certainly on the shorter time frames they look soft, and there's the structural changes coming through, especially on the Dow. It's just looked softer all week. The DAX likewise put a pivot swing in. We're seeing these pivot swings everywhere. It's just normally a bit of a signal. There's a bullish one going here. Look, I can show you many examples of where they've sort of down here on the lows, and there's a high continuation element here, and so on. Here it's looking soft, and the FTSE just really following through, similar bit of a continuation pivot swing, continuing pushing through here. But with all these, just be wary. I mean, take the FTSE for example. You might be better off waiting to see the reaction into its daily pivot. Didn't catch it yesterday, might catch it today. It's not that far away. It might give us the opportunity to look at the sell from that. It's just that bit safer, and if it doesn't react to it and carries through, well, you haven't lost anything. If you do it sell at this point, the problem is you could too easily just see it continue there. Right, okay, that's pretty much it for me this morning. I wish you a great day's trading if you can get onto a trade. Just the way things are at the moment with these markets, and as I said, we've got a busy week coming next week, so we'll probably have markets moving in fits and starts. You just literally get a bit of action and then go into consolidation. Action, consolidation is what I'm really expecting, but who knows, we could see a follow on of the trends. Anyway, I shall leave it there and catch you later.